students, 11th standard accountancy, chapter 3, exercise sum number 16. Kavita is a partner in a firm. She withdraws 2500 per month regularly. Interest on drawing is charged at 4% per annum. Calculate the interest on drawings using average period. So here before we find out the interest on drawing under direct method, and second one method is product method. Okay, now we are going to find out the interest on or calculate the interest on drawing under average period method. Okay, so they have given here three situations. What are they? If Kavita withdraw 2500 rupees at the beginning of the every month, and the middle of the second situation is middle of the every month, and third situation is given here at the end of the every month. So what is the format for to calculate the interest on drawing under average period method? The format is under average period method. Interest on drawing calculation is total amount of drawings into rate of interest into average period divided by 12. Listen, Kavita withdrawn cash 2500 per month regularly. Okay, first we have to take beginning of the every month. They have given beginning, middle and the end of the every month. So we have a formula for the average period monthly wise. Okay, so at the beginning of the every month, Kavita withdrawn cash 2500. Okay, so what is the formula for average period for monthly wise at the beginning of the every month? 6.5. How will you get 6.5? Listen, how many months in a year? There are 12 months. Okay, so if Kavita taken cash from her business at the beginning of the every month, we have to add 1 month extra. Why? Because total months, how many days in a month? There are 30 days or 31 days in a month. Okay, so if Kavita taken cash at the beginning of the every month, beginning means we have to consider day 1 to 10. Okay, from day 1 to 10, between these days, Kavita taken cash from her business 2500 rupees. So if she taken 2500 rupees between these 1 to 10 days, that is called beginning of the month. Okay, so she has to pay remaining how many days in a month? After 10 days, from 10 days to, or from 11 days to 30 days, we will get 20 days. For this 20 days, she has to pay the interest for taken drawings. Okay, so she has to pay not for this 20 days, she has to pay 1 month fully. She has to pay the interest for this 1 month fully. Okay, for the first month. Okay, so how will you calculate the average period? So we have the two period, 12 months and plus 1 month. So we have 2 periods means divided by 2. To find out the average period, we have to divide by 2. So 12 plus 1 equal to 13. Divided by 2, you will get 6.5. So the beginning of the month, the average period is 6.5. Okay, if Kavita taken 2500 rupees in the middle of the every month, that means in the middle of the every month means after 10, you can consider from day 11 to 20. This is called middle of the every month. So you will take the average day, that means from day 11 to 20, you will take 15. Okay, so every month 15, Kavita has to take 5,000 rupees, 2,500 rupees from her business. So every month 15th, she has to take 2,500 rupees from her business. So for that she has to pay the interest. So listen, for the first month, she has taken interest. Okay, every month 15th she has taken interest. For the first month, from 15 to 30, we have 15 days remaining. Okay, so rest of the 15 days she has to pay the interest. So that 15 days means off months. So off months means 0.5 months she has to pay the interest for taken 2500 rupees from her business. So remaining after off months, remaining months is 11.5 months out of 12. Okay, so how will you calculate the average period? So there are two periods here. So for this off months only, she has to pay the off interest. Okay, remaining rest of the 11.5 months, she has to pay the full month interest. Here she has to pay the off month's interest only, because she has withdrawn cash middle of the month only. We assume 15th, every month 15th she taken cash from us business, so she has to pay off month interest for the first month. Okay, this is called first month interest, half month interest. This is rest of the month, means out of 12 we have 11.5 months, right? How will you calculate the average period? So there are two periods here, so out of 2, so you have to add 11 plus 5 plus 0.5 means 12. There are two periods, that means divided by 2. So after cancel it, you will get 6. Okay, so the average period is middle of the month, average period is 6. Okay, then at the end of the month, Kavita taken 2500 rupees from her business at the end of the every month. Okay, so after 20, at the end of the every month, you have to consider from 21, day 21 to 30. Okay, so what is the average days between them? We have to assume 25. Okay, approximately every month 25th Kavita taken 2500 rupees from her business. So for that she has to pay the interest, right? So from 25 to 30, how many days between that? 5 days. So listen, for this 5 days Kavita won't pay the interest for taken money for these 5 days. Okay, because at the end of the month only Kavita taken cash from her business. So remaining 5 days, for these 5 days Kavita won't pay the interest. So 0 interest only she has to pay for the first month only, not for every month. First month only she has to pay the 0 interest. Okay, so listen, remaining out of 12 months, remaining we have 11 months. So these 11 months she has to pay full month interest. Okay, right, full interest. For the first month she has not paid the interest. Okay, so how will you calculate the average period? So 11 month plus 0. Okay, we have 2 periods, so divided by 2. So 11 divided by 2, you will get 5.5. Okay, so listen carefully. At the beginning of the every month, the average period is 6.5. At the middle of the every month, average period is 6. At the end of the every month, average period is 5.5. In this way only you will get the average period. Listen carefully, remind it. 0.5 every month reduced to 6.5, middle 6, and the end of the month is 5.5. Okay, now you will calculate at the 3 situation is given here. So beginning of the every month Kavita has taken 2500 rupees. Rate of interest is 4%. Under average period you are going to calculate the interest on drawing. So the total amount of drawing is, so 2500 into 12 months equal to 30,000 rupees. So what is the formula? Listen, you have to first write the heading. You should write the heading first. Okay, the first situation is if drawings are made at the beginning of the every month, average period is beginning of the every month, average period is 6.5. Now only we calculate it. Okay, so what is the format for interest on drawing under average period method? Total amount of drawing into rate of interest into average period. What is the total amount of drawing? 30,000 rupees. Rate of interest is 4%. Okay, so 4 by 100 into rate of, and average period divided by 12. Average period in the beginning of the year every month is 6.5 divided by 12 as per the format. Okay, now you have to cancel it. Okay, 1 4 is 4, 3 4s are 12. This 2 0 is to be cancelled for this 2 0. 1 3 is 3, 10 3s are 30. This 0 is to be added here. Listen, after one digit you have a point here. Okay, so to cancel this point, for this 0, this point is cancelled. Okay, remaining we have 65. It converted into 65. So 10 into remaining we have 10 into 65. 10 into 65 equal to 650. So the interest on drawing under average period method at the beginning of the every month is 650 rupees. Next, the next situation is Kavita taken cash from her business 2500 rupees in the middle of the every month. Okay, what is the average period in the middle of every month? The average period is 6. You have to write the heading if drawings are made in the middle of the every month. Formula applied. Okay, so as per the format, rate of interest amount, total amount of drawing is 30,000 rupees. Rate of interest 4% means 4 by 100. Average period divided by 12. Average period is 6 divided by 12. Okay. Now we have to cancel it. 1666, 2 6 are 12. 1 2 is 2, 2 2s are 4. This 20 is to be cancelled for this 20. Remaining we have 300 into 2. 3 2s are 6. This 20 is to be added here. Okay. So you got 600 rupees interest on drawing middle of the every month under average period method. Now the third situation is if Kavita taken 2500 rupees cash at the end of the every month. Okay. So what? So first we have to write the heading, that is if drawings are made at the end of the every month, the average period end of the every month is 5.5. Format is applied. Okay. So as per the format, total amount of drawing is 30,000 rupees. Rate of interest 4%, 4 by 100, and the average period divided by 12 means average period 5.5 divided by 12 entered. Okay, now we have to cancel it. So this 20 is to be cancelled for this 20. 1 4 is 4, 3 4s are 12, 1 3 is 3, 10 3s are 30. This 0 is to be added here. So after one digit we have a point here. To remove this point you have to cancel 1 0 to remove this point. You will get next 5.5 is converted into, after cancel this 1 0 for point, you will get 55 into 10. Okay, so 55 into 10s are 550 rupees. So the interest on drawing under average period method is 550 rupees at the end of the every month. Do you have any doubt? Please comment it on the comment box. Thank you. Take care. Please subscribe my channel.